Hello, and welcome to this session, LO2, Understand Different Sources of Business Finance. In this session, we will explore how businesses fund their growth and operations. This video examines the various sources of business finance, both internal and external, and highlights the advantages and challenges associated with each. Internal finance is generated within the business. It includes retained profits and asset sales. These sources avoid external borrowing. However, they are limited by the business's own resources. Let's explore these in detail. Retained profits are reinvested earnings. They offer no repayment obligations. Ownership control is maintained. However, they require the business to be profitable. They may limit dividends if overused. Owner's capital involves personal savings. It's quick to access with no interest. It shows owner commitment, but it poses personal financial risk. The amount is limited by the owner's resources. Selling assets generates cash without borrowing. It can reduce maintenance costs. However, valuable resources may be lost. It's often a one-off option. An example is selling a company car for funds. External finance comes from outside the business. It provides large capital but includes obligations. Repayment and interest are common. Ownership may be shared. Let's delve into these options. Bank loans offer substantial capital. They have structured repayment plans. Interest and collateral are required. Approval can be strict. An example is a restaurant loan for refurbishment. Overdrafts allow withdrawal beyond balance. They solve short-term cash issues. Interest is only on used amounts. However, rates are higher than loans. They are repayable on demand. Trade credit delays payment to suppliers. It improves cash flow without interest. Late payments may incur penalties. Supplier relationships can be affected. It's useful for buying stock. Leasing spreads asset costs over time. It preserves working capital. Maintenance is often included. Total costs are higher than buying. Ownership may not transfer. Venture capital provides large funding. Investors offer expertise and networks. Ownership and control are shared. High growth is expected quickly. It's common in tech startups. Business angels invest personal funds. They often mentor businesses. Equity is exchanged for funding. Conflicting visions may arise. They're suitable for early-stage companies. Grants are non-repayable funds. They improve credibility. The application process is competitive. Conditions and reporting are strict. They're ideal for specific projects. Crowdfunding raises small amounts from many. It's often online. It can double as marketing. Campaigns are time-consuming. Funds may not be released if targets aren't met. Debentures are long-term loans. They're secured against assets. They have fixed interest rates. They increase the debt burden. Interest is paid regardless of profits. Correct. Choosing finance depends on purpose. Consider cost, control, and risk. Stage of business matters too. Startups may need owner capital. Mature firms might use retained earnings. Internal finance avoids borrowing. It's limited by resources. External finance offers large capital. It includes obligations like interest. Each has unique advantages and challenges. Internal finance has no interest. It maintains ownership control. It's immediately available, but it's limited to profits or resources. It may restrict other investments. External finance provides growth capital. It has fixed repayment schedules. Interest costs can be high. Collateral might be required. Access can be limited by strict criteria. Internal finance is resource limited. It may reduce dividend payouts. It could limit reinvestment. Profits must exist to use them. It's not always sustainable long-term. External finance has interest obligations. Ownership might be shared. It adds to the debt burden. Approval can be challenging. It's often tied to specific conditions. In conclusion, today we have learned that understanding different sources of finance is essential for every business. Each source offers its own advantages and limitations, so it is important to choose the most suitable option based on your business's specific needs and goals. If you have any questions, please contact the UK Varsity team by text at 07000 484 366 888. A member of our team will be pleased to provide you with any further information or assistance you may require. Thank you for your attention, and we look forward to connecting with you soon.